Good afternoon. Welcome. In true sustainability fashion, like one wind turbine would say to another, we're planning to shoot the breeze for the next 30 minutes or so. Hear from our industry experts, who I'll introduce in a few moments, and hopefully give you the opportunity to ask some questions. So on our panel, we have Gregory. Michael is part of RSA, directly on my left, and John Keppel from Zurich. Michael is RSA's head of underwriting strategy. He's responsible for market performance analysis, emerging risks, underwriting appetite, and strategic opportunity identification. And Michael is Australian. And John is Chief Sustainability Officer for Zurich's UK business. He's responsible for all things sustainability, the customer office, and the engineering business. So he's a sustainability ninja come Superman. John's background is in operations, where he was latterly COO of the UK business, Zurich's UK business. And John is from New Zealand. So if we don't get any good audience questions, I'm going to open the floor to a discussion on cricket and rugby. I wanted to start by reminding ourselves of the profound impact that the insurance industry has by protecting and stabilizing societies from shock and other unexpected events, and also the huge sums of money deployed principally through investment portfolios which contribute to sustainable economic development. And I guess against that backdrop, regardless of how we might define sustainability within our respective organizations, and I recognize there are a number of different definitions, one thing is becoming clear, which is, I guess, the imperative from a whole load of different stakeholders of P&C insurance businesses, for those businesses to do the right thing whilst also making money. So guys, I guess against that backdrop, and thinking about it in the context of your organizations, keen to understand how you're embedding sustainability within your commercial propositions, and also given the breadth of sustainability, the E, the S, and the G, how are you prioritizing objectives? And Michael, maybe if we come to you first.
Sure, and thank you for the introduction, Amir. So I think sustainability for me and for RSA or broader Intact Group is all about helping people, helping society, because fundamentally that's what we're here for. We're not here to help ourselves. So anything that we can do, any policy we can make, any appetite change we can adjust is there to help society, and that's really one of the key values we have as a group and that we try to live every day. Now, when we're looking at it from a commercial point of view and how we want to change the way that we adapt with clients, with brokers, and with regulators, we want to keep forefront of mind that what we're doing is setting us, both ourselves up to be here for our clients and for our brokers in 10, 20, 30 years' time. I mean, RSA was the first insurance company in the world when it was royal 315 years ago, and only via making those really sound decisions around sustainable business were we able to do it. But sustainability means something more now. You know, if we don't make sustainable decisions around the environment and around the people that are in the communities in which we operate, then no one will be here in that period of time, and we fully recognise that. So we need to make sure that we are enabling that transition, and I'll talk about that more later around clients, but for us it's all about helping society, making sure the propositions that we have and the values that we have in the organisation align to that. So that's probably from me, and I'll pass over to John.
Very similar theme. You know, I mean, our conversation internally is really very similar to the one that the insurance industry has. We're an industry that's focused on the sustainability of our clients, their livelihoods, their businesses, and you know, we take that responsibility pretty seriously. So I think the increased focus that you see across a range of industries now on sustainability is kind of nothing new to insurers. And particularly when you look at the climate, lens because, climate for P&C insurers is, the biggest source of perils really. So it's something that we've been focused on for an awful long time. In Zurich, we have the climate element to our sustainability agenda, but as Michael referenced, there's a big focus on the communities that we serve and the role that we play in those communities. We're a pretty significant player in the public sector business here in the UK, so that community focus comes into a very kind of crystallized light. And then we also work extensively on the employment proposition for people that work within our group and make sure that we can offer sustainable careers, that we can offer skill transfer opportunities, and so that we can kind of live and breathe as an organization some of the sustainability ambitions that we have with our external customers as well.
Thanks, John. And hold on to that thought about the climate point, because I'd like to revisit that. But I just want to come back to something you said, Michael, which was sort of enabling our clients. What does that mean for underwriting strategy? And how might that change the way in which P&C insurance businesses underwrite?
Yeah, it's the question of the moment, Amir, to be honest. I think we are coming from a backdrop of a largely fossil fuel dependent society, one where sustainability was secondary to society developing, growing, and establishing itself in the 21st century. But what we can't forget is that that's not where all of society is. That's where the fortunate areas of Western society are. I can't remember the stat exactly, but there's roughly 2 billion people that their main energy source is burning animal dung. So when we look at that and we take that into consideration, we can't rush into things. We have to transition gradually to ensure we're bringing all of society with us, not just the privileged few that are in either the Western or the select Eastern markets of the world. So when we're looking at this with clients and when we're looking at this with regulators and society, we're looking to be, how can we do this in a structured and sustainable manner and make sure that we're hitting the targets that we set? We only set targets that are achievable, so we're not misleading or greenwashing society, and we're doing it in a fashion that our people and our employees, our most important asset, can really get behind. When we're doing it from an appetite perspective, to really come to the underwriting point of view, we're completely enabling questionnaires for our customer directors to go out there, for our BDMs to go out there with brokers. We're putting pressure on brokers to put pressure on clients to work with us, to not just give us data or say, we just want your capacity. It's, we want to partner with you on this journey, because it is a journey. I know it's a long one too. We've seen some of our peers remove themselves from certain groups over the last few weeks. There's a lot of issues around the world around climate skepticism still. It's still in some of the Western nations. So this is not an easy transition. This isn't just, if you aren't doing renewable energy, then we have to throw every energy piece of business out. We can't do that. We've seen fundamentally over the last year just what happens to energy bills, just what happens to the poorest in society when energy goes up 30, 40, 50%. If we switch to all renewable energy today, it's not even possible. We don't have what we need. If we tried to switch to all electric vehicles tomorrow, it's not possible. We don't have enough lithium mined in the world to go there tomorrow. But we are on a journey to get there. So we need to insure projects and provide propositions that enable that transition. And we also need to make sure that we're true to our word. So when we make promises and we make commitments, we stand by them so that the insurance industry can be the one that actually lives its promise. And I think fundamentally in the past as an industry, we haven't done a great job at that. But we're in such a unique position now that we can influence society and do it really positively, but only if the whole market moves with us. We can't have segments of the insurance market wanting to go a different way. So if we can do that, we can underwrite and influence positive change, and that to me is ensuring the transition.
Thank you, Michael. And I mean, some really interesting themes there, and one that I'd pull out is this one around fair and equitable transition. John, would you perhaps like to sort of offer some thoughts in terms of the S and the G components of the ESG, but particularly, I guess, in the context of balancing doing the right thing with making money, but also, sort of how we ensure as an industry we don't inadvertently become the guardians of morality for society.
Yeah, I think trying hard not to be boxed into that role, because it is a transition. There are strong pressures, I think, on the insurance industry and on banking to be the kind of stick that industries are prodded with. Our capacity, being used as some kind of accessibility point. But I think, very much like Michael says, we see it as a transition. It's a very nuanced transition. It's extremely different paced in different industries. And we've got some industries that are charging headlong into new solutions and a low carbon future. There are other industries that will take significantly longer to get there. And that doesn't make them wrong, it just makes them different. And we need to be able to support them, challenge them, but support them in that pace of change, rather than have our capacity used in ways that isn't in the best interest of those customers and isn't in the best interest of society. I think if you look at particularly the S element and the sort of societal impact that we can have, we do, I think, have, and broadly as an industry accept a responsibility to be an influential player in how society adapts and how society transitions. And whether that's through servicing and supporting public sector organizations or the public sector agenda, there are a number of different ways that we can do it. And we can lead other industries, whether it's in social enterprise procurement or other levers that are not the typical climate-oriented approaches. There's several other elements that I think we've got to a sustainability agenda in most organizations' definition, and we need to use all of those.
And are you finding that your operational background has been sort of helpful in terms of sowing some of the seeds in the context of some of the examples you talked about?
Yeah, I think it is, although I don't think it needs me. To be honest, the passion that our operational teams have for, solving some of these problems themselves is really quite impressive, and I don't think that's unique to our organization. I think that's the case across the board. So, I often describe my current role as sort of chief cat herder. I'm going around the organization facilitating conversations between people. Seldom am I having to stimulate inactivity. I'm trying to coordinate activity into some coherent themes that we can measure and that we can track the progress. As Michael says, it's really, really important. We get a bit obsessed about metrics, but they are important because we must measure the progress that we're having, and we have to identify areas where we're not making progress at pace. But it's more of a question of kind of collation of those activities. I think the passion and enthusiasm for these topics, certainly in our organization, and I think in the industry as a whole, is extremely strong. I think it does help, or it certainly has helped in our organization, to have a focal point for that and to have someone at the top of the organization that's accountable for it. Not just that can take the climate, SMF, but actually can kind of lead and coordinate activity across the enterprise. That helps us with engagement, whether that's a customer dialogue or whether that's an employee dialogue. It provides a focal point for it.
So it's really interesting to hear, and doing a similar role to yourself, a lot of what you're saying really chimes, and I put it down to the fact, people are interested and therefore want to get involved, whether it's through specific projects or at the side of their desks. As I said, I want to come back to climate. You mentioned it in the SIMP context just now. You mentioned it earlier. Clearly really important for the P&C industry. I guess my question to you, Michael, is in the context of sort of Nat Cat events becoming more frequent and severe, how do we address the $1 million question, that being the insurance protection gap, and indeed the increasing insurance protection gap?
Yeah, it's probably more than $1 million question. It's probably the $1 trillion, pound, whatever currency you want question. It's a real challenge. It's got to be data led. So we need to upskill our industry in looking at what not what has happened, but what we think will happen into the future. So what we know is that based on previous events and based on previous data, it only gives us an indication. We've got to provide a layer over the top here of what do we expect to happen when we apply inflation to these metrics as well, where do we see losses going? Do we have the capacity for that? And then we have to ask the question of ourselves, do we have enough coverage across the private insurance industry to provide what's needed to support society through this? I think the answer is no. I don't think we do. And I think most of the insurance industry would chime and agree with that. And I think a great example of how we can work with governments and work with society is Flood Re in this country. I think it's one of the real shining beacons of how public-private partnership in insurance can work. We've been signed up to Flood Re. I know Zurich are as well. It is amazing when you look at the data and look about how many properties in this country would be uninsurable if it wasn't for that public-private partnership. We were stress tested on this with the Bank of England last year, and all the findings are up there on their website, so I highly recommend giving it a read. It just shows you that the integration of public and private together in relation to climate is essential. There's so many aspects of this around the world where it doesn't happen, and where so much of the onus is put purely onto the private sector, and we're sort of beaten with a stick. I know, so obviously being Australian, I'm very familiar with climate disasters, and I also grew up in regional Australia, so extremely familiar with climate disasters. And for a long time it was, if the insurer goes, well, this wasn't in our wording, so therefore you're not covered for this type of flood, it's like, well, the big bad insurance company, it's your fault. Now, that's all well and good, but the problem is that driving that narrative was governments at the time. Now, that's starting to change there, and we're seeing a lot more partnerships in Northern Australia where they have a lot more cyclone and flooding events. But if more and more nations and more governments can take a leaf out of what's happening in the UK with Flood Re, we do have a chance to solve that $1 trillion pound gap, or whatever you want to call it. The other way we can start to solve it, and I actually heard this in the last conversation, they were talking about parametric solutions. I think fundamentally that is essential. We've got to find a way from a nat cat perspective to work with, whether it's partners like RMS, who's now owned by Moody's, or whether it's a tech provider that can provide us with meteorological data, to work as an industry to be like, well, how can we all put this together? Is it levies? Is it different wordings around approach? Is it different rebuild techniques? Is it once a certain area is flooded, we do not rebuild there, and there's certain policy put around that, and everyone signs up to that? Because if one private insurer breaks free from that, then it kind of derails the whole momentum of an industry, and it can derail the whole momentum of a government or a regulator as well. So we've got to work together on this, and I think, from what I'm seeing in the industry, particularly in the UK, but also through Europe, is that there is that push, there is that desire to help people. I know as an insurance industry we get lambasted quite a bit for being, we're all focused on quarterly profits, but my experience, and John's been in the industry far longer than me, and you have too, Amir, is that most people in insurance companies really just want to help people, because we are all ourselves functioning members of communities in which we live and operate. So, we're trying to find solutions, and I think if we can bring the government and bring the regulators with us, because we have that data, then we can start to close the gap. But it might take some pretty radical solutions to do it. One of my favourite ones is what's happening in Jakarta at the moment. I'm not sure if anyone's familiar with this. Is they're actually moving the city of Jakarta because it is so prone to climatic events. So I think we need big, innovative new solutions to solve for what is the biggest challenge of our lifetime. So, yeah, I think it's solvable, but we're going to have to take some big bets to do it.
So collaboration trumps competition. Government involvement is key. John, you look like you were about to say something, and I wanted to sort of add to that a question, which was, are governments indeed doing enough? And I think about sort of some of the rhetoric from the likes of Tariq Fancy in terms of, sort of the smokes and mirrors behind ESG. Can you comment on that and say whatever else you were going to say on this subject as well, please?
Yeah, I was just going to come up. I mean, I think the Flood Re example is a great example of the contribution our industry can make alongside, government. But it's a financial tool, right? It's a mechanism for us to try and close or help close that gap. But the big area where we have yet to make significant progress is adaptation, and that we're not waiting for some unknown future. We can relatively accurately predict it and the pace of it, and we have to adapt. So the the example from Asia of moving cities, I mean, this is the sort of enterprise that we need to get engaged in. That's not to say insurance companies are going to take responsibility for all of that, but we have a role to play because we understand risk management. We all have teams of people who advise customers on minimizing risk and protecting their businesses. And we need to use that expertise alongside government, as well as putting financial mechanisms in place. We need to up the game on the noise we make, not just about climate mitigation, but about climate adaptation as well. And I think it's the missing piece in the jigsaw that we have to pretty rapidly get our heads around the role that we play. Because I think a big part of the answer is in how quickly we can get, society, organizations, companies, and communities to, a place where that adaptation plays a big part in protecting them and maintaining the resilience of those businesses and communities.
Michael, you touched on parametrics, which I just wanted to come back to. What does this mean? Question to sort of both of you. What does this mean for product?
Yeah, good question. I think we're still in the embryonic stages of how parametrics can work for different risks and different risk types, how they're worded, how they fit into certain regulatory regimes around the world, around customer duty, consumer duty. Are we providing the right service that's fit for purpose for a customer? I think that's still got to get worked through. But I think taking parametrics, really we should be looking at parametrics as a solution, not about restoration, but actually about prevention. And I think John hit the nail on the head there, where he said, it's climate mitigation, it's climate adaptation. I think parametrics is just another tool in that toolkit, where we go, even if things will happen regardless of how well we prevent and mitigate, because whilst we can predict maybe the intensity and how frequently we see climatic events, we can't always predict how humans are going to respond to them. And I think we've got really good as an industry around restoration. We've got really good around identifying what might happen. But we haven't got really good at stopping small-scale weather events turning into large-scale disaster losses. And I think what parametrics enables us to do is to reserve better. It enables us to underwrite better because it's more in plain English. And it means that customers, hopefully into the future, can know a lot more about what coverage they're receiving. But yet again, what does that do to the intermediaries in the market? Does that render some of their service void, potentially, for certain risks? Does that mean that some of the primary market becomes a bit void because reinsurers just take on that risk directly from a parametric point of view? Now, I don't have the answers to these questions, but as we continue to try to solve for it, I think it fundamentally plays a role in product. But product more broadly has to have that element of prevention and mitigation up front. Prevention always trumps restoration. And I think if that's the one message that we've got to send, whether it's our risk engineers, whether it's our customer teams on the phone to our clients, talking them through, whether they have the right protections in their home, or if it's from a commercial point of view, whether they have, the right protections and sandbagging if they're near a reservoir. We need to make sure that prevention's front of mind throughout the whole process. If we can do that, we will mitigate a lot of lost time and a lot of losses. It will never be all of them, but it's definitely on the way. And I think we've got to make that front and centre of property-related product moving forward.
So prevention over cure.
Yeah.
John, any further thoughts? Maybe less with a parametric lens, but thinking in the context of sort of clean tech and opportunities for insurers there.
Yeah, I mean, I think on the product and proposition side, it would be naive of anybody working in insurance to think that we will somehow navigate our way through, the decarbonising of the global economy without significant change to the way in which our products are designed and structured and delivered to organizations. I mean, they must change. So we have a real opportunity that we're at the table in those conversations with customers, that they're challenging us right now as to what's happening with their businesses and their journeys, what coverages they will need. And in all honesty, we cannot satisfy all the coverages that they would like currently in the way in which our products are designed and delivered. And so that's a challenge straight back to us to say, well, how do we use tech? How do we use data? How do we enhance those products and propositions so that we can continue to serve those customers and we can extend the relationships that we have with those customers. So it's a really, I think, exciting time to be involved in the insurance industry. It's a slightly threatening time to be involved in the insurance industry, but the flip side of that is a massive opportunity. So, I think it's, there's a degree of high energy about that. I think there's a degree of excitement. Frankly, some of those products haven't changed for decades, and the challenge and the new impetus to design products that serve a slightly different purpose and probably an extended purpose for customers is, I think, something that's pretty exciting.
Thanks, John. We can't possibly have a fintech conference and discussion on ESG without talking about data. In the context of, I guess, sort of all the things that we've talked about today, embedding climate, key stakeholders, collaboration, what are the opportunities presented by ESG, or the alphabet soup of ESG data, and what are some of the challenges that we face? And I guess in the context of that Antipodean rivalry, I'm going to ask one of you to comment on opportunities and one on challenges. Who wants to go first on opportunities?
You go on, I'll have a go. I think our industry thrives on data, always has. It's obsessed with it. And the more we have of it, the more we obsess about it and the more we want. Everybody's got better data than we have, apparently, if you talk to different members of your underwriting teams, I'm sure. But there is a huge opportunity for us to improve and increase the volume of data. We can now process that data as organizations, hopefully most of us. We've got much more effective in handling and managing that data and utilizing that data for decision making in the business. So it's an extremely powerful tool. We've historically become obsessed with historical data and analyzing historical performance. And I think we need to learn how to use different forms of data, different sources of data, and incorporating some of those data inputs into core product and proposition. How do we expose some of that data to customers? How do we let them benefit from it? How do we show them data in a timely fashion that allows them to make better decisions for their businesses, not just in relation to our products and services? So I do see it as a big opportunity. I think as an industry, we've learned how to use data, in far more material and technologically savvy ways. We're not limited to massive spreadsheets anymore, hopefully. I think it does present a bit of a key to unlock something that's potentially quite exciting on the product development side.
Thanks, John. Michael.
So I'll be the pessimist then. So I think there's some really key challenges happening with data around ESG at the moment, and I think you'd have to be living under a rock not to hear what's going on with ESG ratings. There are so many different players out there, whether it's ratings agencies, whether it's broking houses, whether it's consulting firms, all trying to push their own ESG rating methodology. The problem we've got with that is that they're inherently biased by who sort of designs the methodology, who designs the inputs, where is weight placed. We looked at one provider, I won't name names, and they rated 2 coal mining firms that we would not do business with because of our underwriting appetite, but they rated their ESG rating a 9 out of 10. And when you actually get under the raw data, it's because of the way that they've weighted that. So I think we've got to take all the ESG data provided by third parties with a grain of salt. At RSA, we use ESG data, but we don't use ratings. We don't believe in third-party proprietary ratings for ESG. We believe in raw data and using that analysis ourselves to come up with our view that supports the way that we see the transition going. I think John's right. There's a huge opportunity to use and leverage that data and use automation and artificial intelligence to save us time. But the decision that we need to make needs to be our decision, because even the artificial intelligence that we use, whether it's from a third-party provider or whether it's from internal, it is inherently biased to who puts the inputs in place. So I think there are huge risks. We need to be
eyes wide open. It looks like a great shortcut to be able to go to one of the ratings providers and say, we'll just take their rating and therefore we'll build an underwriting methodology around those ratings. But if you don't inherently understand the data and understand what you want your portfolio to look like and what you want to stand for, what your values are as an organization, which is like creating value and finding purpose, then you will find yourself in a really, really tricky position, I believe. And I think the regulators are noting that already. I think I saw the Bank of England last week is opening a deep dive into ratings providers, and that we need to have a bit more of a standard view of this. Do I think that's going to be tomorrow? No. Next year? Probably not. But into the future, I think the more that we can work together to find that, the better. But as long as we have divides in society, we're probably going to have divides in how this works. And you've just got to look at the United States. We have some states that are sort of mandating ESG considerations. We have other states banning them from being used in an assessment process of financial services. You know, that's one of the Western leading countries of the world, and it can't unite to do that. You know, and I think we're seeing that in Europe as well, where there's some pushback in certain areas and some pull and push. So, yeah, some huge risks there, but I think it's also very exciting that we have the ability to start shaping it. So I'm with John. I think the opportunities outweigh the risk, but there are definitely some risks there.
Brilliant. Thanks, Michael. And if anyone's interested, there's a really good animation from the FT and Gillian Tett, which was put out last week. It's on YouTube. It's about 2.5 minutes long, covering the anti-ESG legislation and the anti-ESG legislation in the States. And it's a bit of a parody within it, but it's quite a good watch. I guess sort of summarising what you've sort of both said, you know, sort of data key, really important, but not without pitfalls. And I think the correlations point, or the lack of correlations within sort of data agencies is a key one. And if we think about it, it took the bond markets 25 years to get aligned, and we've just started this journey. I wanted to come on to some of the audience questions. I'm going to wrap a few of them together. So the first theme is around sort of the S in ESG, and John, you sort of touched on this. The question was along the lines of, you know, there's a lot of focus on the E. What more can insurers do sort of in the S space? And is there the ability to focus more on broader customer well-being and journeys as part of what insurance companies do? Would you like to take that one?
Yeah, and I think, there definitely is. I think there's, you know, we've obviously got regulation coming which focuses the mind even more on customer outcomes. I think as an industry, you know, personally, we've done a pretty good job of focusing on customer outcomes, but there are always improvement areas, and the latest legislation, you know, doubles down on those commitments. So I think there will be things that we will see enhanced in terms of customer journey management. But, you know, I also think that the role that insurance plays in protecting society can't really be overstated. I think it's unfortunate that we've never been able to get that message across in the way that, you know, I think people that work in the industry live and breathe it. As I said before, it's pretty pertinent to us because of our public sector focus, you know, whether it's a housing association, it's a school, or it's a local community business or charity. Those are really, really important customers to us, and we understand them in the same way as we understand large commercial customers. The pace of movement is very different, the needs are very different, the insurance expertise, frankly, inside them is very different. I think the thing that we can do is offer them more than capacity, you know, and offer them more risk management expertise, more risk engineering expertise, more focus on how they adapt, you know, trying to make sure that their businesses, their societal elements are better protected, not just financially, but actually so that we can manage and maintain the continuity of the services that they have. Because, you know, when you take away, you know, a housing association's capability to support its customer base, you're talking about putting people out on the street, or you're taking away a school's ability to educate a community's children. So, you know, these are very, very critical, you know, components of communities. And I think that the role that we have should go beyond capacity provision and should go into, you know, how we can help those organizations be more resilient and more protected against future losses.
Thanks, John. And I guess what I wanted to add to that was, you know, this is an area sort of really important to us at MS Amlin, and the way we're working through some of this is through case studies, because it's not straightforward. And what we're finding is, even amongst our own board, we're having sort of split views on should we or should we not write some of these risks. And the yardstick for us is, is this aligned with our espoused values, or does it fly in the face of them? And if so, what mitigants might we put into place? Michael, there's a question on, well, actually to either of you really, on sort of the role of health insurers in ESG. So could you comment on that? And then the sort of question goes on to say, particularly in the context of the current climate in the UK and the pressures on the National Health Service.
That's a question for John. We don't do health insurance, so I'm handing straight over.
Yeah, neither do we, but I'll have a go. We do a bit of life. I think there is a role to play, but this is a personal view, probably not really a corporate one. I think if you look around the world at the different health service provision, the most effective models seem to be the combinations of private and public partnership. It's not one, it's not the other. It's the combination that serves society better, or seems to serve society better. So I think there is definitely a role. We kind of have it in a slightly nervous sort of standoff stance, I would say, in the UK, because of the sort of national treasure status of the NHS. It means that the dialogue that we can have around the role of private health provision is a bit confused. And I think that there's plenty of examples of where that public and private combination has supported, countries much better for long-term kind of sustainable, affordable health provision. In fact, Australia's system is, an excellent sort of case in point, where the public-private partnership seems to work pretty damn well, to be honest, and certainly better than I think we've currently got here in the UK. So I think it's a matter of looking and learning and trying to have a slightly more mature debate about the role of public provision and the way in which private can support it. Not private for profit, but actually, private for, for a partnership model that protects everybody.
Brilliant. Thank you, John. I'm conscious we're coming to time, and I wanted to say thank you both ever so much for sharing your insights. Is there anything else that either of you wanted to add as a sort of parting comment or perspective on sort of the ESG journeys that you've embarked on and are clearly at the sort of earlier ends on? But it sounds like you're making lots of traction. Are there any sort of parting thoughts for the audience?
I guess I would just say, kind of reiterate the optimism and excitement that I have for working in the industry at a time of such material change. I don't think we've seen anything like this for us to support as an industry, kind of since the Industrial Revolution, really. It's going to be a massive opportunity. And I think it's really helped give additional purpose to our organization, because we see ourselves as having a pivotal role in it. And I think that's something that has really energized a lot of people within the organization, and I see that across the industry. So, I would just reiterate that optimism about taking this challenge on, playing our part in it, and hopefully helping to provide a stronger, more resilient and sustainable society going forward.
Thanks, John. Michael?
Very similar to John. I think we should be really proud of the industry. I think we're taking really positive strides, and particularly in this country and throughout Europe. I think Europe and the UK is definitely leading the world on this. I know we're leading the world on this. We have some amazing people working on it, including John and yourself, and I think the better people we can get in to help us solve this problem from that transitionary perspective, the better the outcome for society, which is a better outcome for us, our families, children, and all future generations. So I think, if you know good people, get them into insurers. We always need good people, and this is a challenge that we need some of the best and brightest minds to solve.
Brilliant. Thank you, Michael. So there's a pitch there. Bring people into insurance, and also, I guess from personal perspective, and we've seen this work within our organisation. Given the nature of sustainability and the fact that it is all-encompassing and cuts across different teams and departments and specialties, there's the ability for everyone in this room to get involved in some shape or form if it's an area of interest. On that note, I'm going to suggest we close the session. So well done, guys.
Thanks so much.